Elevator speech on the banks. So I spent a lot of time researching, and I have to apologize that I have to read this to you because it's complicated. Too complicated for my little pea brain to hang on to. Let's start with the 1990s, after Reagan busted the unions, right?
Yeah.
Someone back then famously said, well, Bill Clinton created a lot of jobs, and I have 2 of them. Well, one day I walked into my Citibank, and there was a poster on the wall, and it really disturbed me. It said, add an extra wage earner to your family, take out a home equity loan. Now these ways of declining with dealing with a declining standard of living, either working your fingers to the bone on 2 jobs or taking out a loan, right? They have their roots in what has been talked about here, the WTO and NAFTA. And that giant sucking sound that Ross Perot warned us all about. The middle class, starting then, started relying on declining interest rates and debt to finance their standard of living. And since then, our economic well-being has become even more dependent on falling interest rates and debt. Now, we know the Federal Reserve determines the cost of money, but there's nothing very federal about the Federal Reserve. It's an independent central bank made up of a number of banks like JP Morgan Chase and Goldman Sachs. These banks scored a big victory in 1999 when Bill Clinton approved the repeal of Glass-Steagall. That was the act that kept commercial banks separate from investment firms. The removal of Glass-Steagall contributed to the 2007 financial crisis because it allowed banks to get bigger and to take bigger risks. The combination of low-cost loans and deregulated banking is a bad mix, especially when you consider how the Fed provides money to banks. It literally creates money out of thin air. How many of you knew that? Got a few people here that know that. Good. And it gives the money to these banks at a discount rate, which is right now between 1/4 and 1/2%. The bank then loans you the money and writes you a draft check when you get a mortgage, right? It's not really money, but it serves the purpose, right? In short, the bank has the privilege, it's granted the privilege of creating your entire loan amount out of thin air without dipping into its own pool of funds. Now, they're supposed to have like 10% of the money they give you in an account, and that's why it's called fractional. Usually it's around 10%. After you sign for your mortgage and the bank gives you your check, the bank doesn't make a subtraction on its books, on its balance sheet. It adds the amount of your loan to their balance sheet because you owe them real money. All this imaginary easy money helped to spawn a building boom and escalating home prices beginning in the late 90s. As the joke went, if you could fog a mirror, you could get a loan. Unfortunately, the banks, no longer handicapped by that pesky Glass-Steagall law, started using their balance sheets to play the markets in ways I can't even begin to explain. If you saw Inside Job or The Big Short, you have some kind of idea of what they did. And then came 2007, and most of us have been paying a heavy price ever since, because we, the people, are after all the real lenders of last resort. Our frightened leaders wisely chose not to raid our bank accounts to cover the losses of the failed speculations of the high rollers. Instead, they asked the Fed to quantitatively ease the ensuing taxpayer bailout by doing more of the same, lowering interest rates even lower, kicking the can down the road. The banks use this not as an opportunity to make low-cost loans to small businesses. Oh no, they went back to their speculating in the global markets, once again putting profits in the hands of the few at the expense of the many. Now, the problem before us is that low interest rates offer no appeal to the majority of us who, bereft of a living wage and facing increasing healthcare costs, are maxed out on debt. And there's less and less of a safety net available from our government, which, through its easy money policies and endless wars, has become a debtor nation to the tune of $18 trillion and has to borrow the money just to pay interest, which is about $500 billion a year. This, of course, like all Ponzi schemes, is unsustainable. Ultimately, we will either emulate the stagnation that Japan has experienced for the last 20 years, or the austerity that Greece is going through. Solutions. And I'm sorry I'm taking so long, but it's the banks. Hillary, ever the incrementalist, will have a talk with Wall Street. Boo! She's going to talk to them. She opposes Glass-Steagall.
Boo!
Her embrace of Clinton-Obama pay-to-play, the neoliberalism, will likely lead her to sell off the commons. I'm speculating, but I can see it. She'll sell off the commons to privateers to stop the bleeding, and even follow the European model of negative interest rates. You put your money in the bank and they charge you for the safety of keeping it there. Again, that favors the wealthy with their borrowing power. All right. Self-identified liberals out there, here's a liberal denial alert. I'm about to kill a sacred cow. Obama chose not to raise the minimum wage despite having the votes. He was willing to cut Medicare and Social Security to placate Republicans. He never brought single payer to the healthcare debate and reneged on promised aid to homeowners victimized by mortgage lenders. Despite being upset with the Citizens United decision, he decided to take money from super PACs. Early on, he brought in the Goldman Sachs boys, Greenspan, Rubin, Summers, and Geithner. He chose not to prosecute Wall Street crimes or pursue ethics reforms in government. And more recently, his adamant support of Fast Track and the Trans-Pacific Partnership belies a corporate globalist agenda. Liberals who exclusively focus on emotional social justice issues while ignoring economic justice issues are not unlike Kansas conservatives that Thomas Frank wrote about. Those people who obsess on the constitutional issues. All of us rearranging the deck chairs on the Titanic. But we'll always have marriage equality, right? Maybe. Asher Edelman, the Gordon Gekko of Wall Street. This is one of these. He's like Gordon Gekko if you saw that movie. He's well known as a Wall Street insider. Guess whose economic policy he supports? Bernie Sanders. He surprised the CNN interviewers. They were dumbfounded by this guy when he announced that. He added his voice to 150 other economists who agree. But you won't be hearing these voices on corporate-owned media. The revolution is not being televised.
That's right.
Now, and I'll finish up. You can't make these names up. The guy's name is Neil Kashkari. How many of you know who he is? How many know who he is? Good for you. He was the golden boy for the banksters when they had to defend themselves in front of Congress. He was their water boy. Now he's the president of the Minneapolis Fed. And you know what he wants to do? Do you know?
We're going to have to wrap it up.
He wants to break up the banks. He's on Bernie's side. I will. Bernie would move away from the neoliberal policies of lousy trade deals, privatization, deregulation, and militarization, and put our country back on real, sovereign economic foundation. Having the wealthy pay their fair share, eliminating offshore tax havens, imposing a tax on Wall Street speculation, and providing decent wages to restore our crumbling infrastructure. But, in concluding, I must warn that we as a people should also be prepared to sacrifice selfish, mindless consumerism for the financial health of our nation, the sustainability of our planet, and the future of our kids and grandkids. Enough should truly be enough.
Right on!
Thank you.
Hey!